Hi, I'm Claire Ralph, Senior Partner at Carley's.
And I'm Conor Chalmers, Senior Manager at Carley's.
This is the first in a series of podcasts where we would like to take you through how a good accountant and business advisor can see your business through every stage in its life cycle. I'm lucky to have been able to do this over the last 25 years with many of my clients, many of whom are now coming up to the retirement stage.
Today we've got David here with us, who is going to be posing as a client and asking us questions that we face on a day-to-day basis in our work. Over this series of podcasts, we will be answering David's questions on matters that he will face in his business from start through to the very end.
Good morning, David, and how are you today?
Good morning, Claire. I'm doing very well, thank you. Yourself?
Yep, good, thank you.
Perfect.
I understand that you've come to see us today to talk about setting up a new business venture.
So David, how can we help you?
So, you've acted for my father for many years. I've been in employment for about 10 years now. Recently married. Now's the time for me to set up my own business.
And what does that business do?
So, I'm an electrician by trade. Used to work as a subby and now just looking to start my own business. So, the trouble I have is I talk to one person who says I should be a sole trader, and I talk to another guy who says I should be a limited company. I don't really know the difference between these. There's a lot of conflicting information online. What would you guys recommend?
That's probably the most common question that we're asked, to be honest, David. It's a minefield, but we're here to guide you through that. So yes, you could trade as a sole trader. If you were to go into business with somebody else, it might be that you want to do it as a partnership, which are like two sole traders working together, or there is the limited company option. Each of those different options has pros and cons. So how about we just run through the pros and cons with you, and then we can help you decide which might be best for you.
Whether you set out as a sole trader or a limited company, each option has different filing requirements. So as a sole trader, you are taxed as an individual. So you prepare a set of sole trade accounts, and that goes on a self-assessment tax return annually. With a limited company, you have to file a set of limited company accounts and corporation tax return annually as well. And you also have to file a self-assessment tax return for your earnings from the company.
So the compliance requirements at the moment for a limited company are more complex than a sole trader. In addition, there are annual compliance statements that you have to file as a company. In terms of the bit that everybody wants to know, our fees, yes, generally will be higher as a limited company because there's more compliance work. However, the commercial benefits in most instances far outweigh the additional compliance of running a limited company. So if we explain some of those commercial implications and how it might offer you a little bit more protection, it might help you to make your mind up.
So as a sole trader, the business is you. Whereas with a limited company, the company is a separate legal entity. That means that with a limited company, there is something called limited liability. So your potential loss is limited to the amount you've invested in the business.
Unless you've decided to give a personal guarantee to the bank or any other creditors, generally speaking, as Conor's saying is right, your liability is limited.
Well, that's all very cool, but at the end of the day, which option gives me a smaller tax bill? Because that's what I really want to know.
Well, that is the million-dollar question, David, and it's one that we hear on a daily basis. And there's no one-size-fits-all answer for that question. It all depends on the individual circumstances. And what we do for all of our clients is we perform detailed calculations to advise them on the best method for them as an individual.
Yeah, I'd agree. Certainly under current legislation, generally speaking, a limited company offers more flexibility and the rates of tax are slightly lower. In addition, as a limited company, the business owner only pays tax on the money they draw from the business. The business pays tax on its profits. As a sole trader, irrespective of how much you draw from the business, you will pay tax on all of the profit the business makes.
So what a limited company allows us to do is it gives us greater tax planning opportunities. So the limited company will pay tax on its profits regardless, as Claire has said. But what we can then do is we can plan how you take your remuneration from the company in the most tax efficient manner.
What do you mean by remuneration?
There are two types of remuneration from a limited company. You have salary or dividends. A salary is a wage, so you receive a pay slip and you're taxed via PAYE, just like any employment. Dividends are what you receive for the shares you hold in the company, and they're taxed a slightly different way to salaries.
However, with a limited company, we're able to plan and we're able to calculate which combination of salary and dividends is the most tax efficient for you. As Conor said earlier, each of our clients is very different, so everybody's circumstances are different, but that's something that we would do as normal when we look at your figures and your tax return every year.
All right, I think that makes sense. Obviously, if I came on and signed on with you guys, you'd be willing to explain that to me in more detail, right?
Absolutely. What we would do is we would give you some personal calculations and we'd also explain the numbers so they all make sense perfectly.
Perfect. What about VAT?
So VAT is a different kind of tax. VAT is a tax that is added to most products and services sold by VAT registered businesses, and it is generally charged at 20%, but it can be lower, at 5 or even 0%. So what are you expecting your turnover to be?
What's turnover?
The total value of your sales.
Oh, right. Well, I secured one contract for about 60k, imagining, say about 100k probably for the year.
Okay, so that would be over the VAT threshold, which is currently set at 90,000.
Right.
That would mean you would need to register for VAT.
Okay. How do I do that? Do you do that for us, or?
Absolutely, yeah, we can help with that. So once we've dealt with your VAT registration, you then have to charge VAT on all of your sales, unless they meet certain rules to be exempt or zero rated. You can also recover any VAT that you have paid on your purchases, and this is then reported to HMRC via a quarterly VAT return.
What does that mean?
Basically, like a tax return you file once a year, a VAT return is something that you file generally once a quarter. At first, it's a little bit more complicated, but we will guide you through it. You record all of the VAT that you charge on your sales. So, for example, if you charge a customer £100 for something, you need to charge them £20 VAT. Similarly, if you pay £50 for some materials, the supplier will charge you £10 and you can recover that.
That sounds like a nightmare. How am I going to do that when I'm working 24/7? Is that something my missus can do?
Well, you've got a couple of options, really. She could do it for you if she's happy to do that. We could help train her, or we could do it for you, whatever suits you best.
Yeah, so as Conor said, the quarterly returns need filing with the revenue. And there was some new legislation that came in a few years ago called Making Tax Digital. So whereas donkeys years ago, you used to be able to file your VAT return and quarterly returns manually, and they were handwritten, they all now need to be done via various pieces of software, so that the revenue have the ability to drill down into all of your figures behind the VAT return.
There's a few different accounting software packages out at the moment, the most well-known probably being Xero, QuickBooks and Sage. We tend to find Xero is the best option, and most of our clients prefer that because they find it to be the most user-friendly package.
Yeah, and I think we go for Xero generally because it tends to be more user-friendly, and most clients have found that they can work Xero, they understand Xero. But whatever suits you. You mentioned your wife perhaps doing the bookkeeping for you. What most of our clients find helpful is for us to come in, set the software up, do some training with her, and then kind of let her have a play with it until she's happy with it. We can check everything before the first VAT return's filed, or even file the first VAT return for you.
The advantage of Xero is that it's cloud-based, so we are able to log in from our machines and see all of your data live.
So you can check if she's made a cock up?
Well, I'm sure she wouldn't, but technically, yes.
Well, I'm happy to let her start that, but then say if something goes wrong, would you guys be able to potentially take over?
Of course, we do that for plenty of our clients.
So there's a couple of other compliance things that we'll need to look at for you as well, which PAYE scheme. So we spoke earlier about how you're going to pay yourself from the company. Generally speaking, and as Conor has said, we will go through the calculations with you, but you and certainly your wife will be taking a small salary from the business. So we'll need to set up a PAYE scheme with the revenue. And that's the way that you account for your tax and national insurance with the revenue on an annual basis. We can do that for you. We can also do an annual pay slip for you.
So I'm a 60 grand contract. I've probably got about 4 or 5 guys working for me at the moment. How am I going to pay them?
That depends on whether they are going to be an employee or a subcontractor. But that's something we'll probably go through in a bit more detail once you're set up.
Right.
We'd need to consider things like the CIS scheme. It's quite a complex area that we'll cover in a lot more detail in a separate meeting.
Right. Well, thank you for breaking that down. There's a lot to take on board there. What would be my next steps then if I were to come on board with you?
Okay, so going forward, David, it would be great to work with you in the future. I think we can help your business in terms of startup and guiding you forward and through the minefield of compliance things you've got to deal with. There are certain things that we have to deal with from a compliance perspective. So part of our onboarding process, we'll need to take some ID from you and your wife if she's going to be involved in the business. We'll also need to send you what's called our letter of engagement, which sets out the terms under which we'll be working for you. On top of that, we'll agree an estimate of fees for the year going forward to cover the compliance work that you'll need doing, so your end of year accounts, end of year tax returns, and we'll give you an estimate of our costs for helping you with VAT, PAYE and CIS. Lots of our clients find it easier to pay us a monthly standing order, so the costs are spread out through the year, and that means when the bulk of the work needs doing, you've already paid our fees in advance, but that's something we can discuss with you later.
A lot of clients have found that beneficial from a cash flow point of view.
We really have only just scratched the surface in some of the compliance issues that you're going to need to deal with, so the VAT, the PAYE, the CIS, etc. But we'll touch base with you on those as we go through in a bit more detail as and when you need it.
Well, thank you guys. Yeah, you really put my mind at ease there. I'm really feel good that you guys can handle every aspect of my business going forward, and I'll be in touch soon.